Hello everyone, welcome to our YouTube channel Making Investments Simple, and today I would be talking about options, trading volume and open interest. I have already spoken about this topic in my separately on in my other videos, previous videos in fact, and how trading volume options trading volumes are important and the importance of open interest. So trading volume is the number of shares or contracts traded in a given period. So when you look at the options underlying stock volume, um, uh, underlying stock volume can give you an important insight into the strength of the current price movement. So keep in mind that the trading volume is relative and needs to be compared to the average daily volume of the stock in question. So, a large percentage change in price accompanied by higher than normal volume is a solid indication of the market strength in the direction of the change. But large percentage increases in price accompanied by small trading volumes are less likely to indicate a market direction. In fact, that might also indicate that a reversal is likely in the near term. So these are very important things when you are looking at the volumes. And now comes the importance of the open interest. Now, open interest is a concept where all option traders need to understand, although it is always one of the data fields on most option code displays along with bid price, ask price, volume and implied volatility. Many traders ignore open interest, but while open interest may be less important than the options price or even the current volume, it provides useful information that should be considered when entering an option position. And you can see the basics of the open interest video which I have made to understand it a little bit better. For example, we are looking at ABC stock, and open interest tells us that there have been 81,700 options opened for 27.5 call option. Now you may be wondering if that number refers to options bought or sold. The answer is that you have no way to know for sure. When you buy or sell an option, the transaction needs to be entered as either an opening or a closing transaction. So if you buy 10 of the ABC 27.5 calls, you are buying the calls to open. So the purchase will add 10 to the open interest figure. So when you want to get out of the position, you will sell the same number of options to close, and open interest will then fall by 10. So that's exactly how open interest is numbered or calculated. Now selling an option can also add to the open interest. So if you own 1000 shares of ABC and wanted to do a covered call by selling 10 of the 27.5 calls, so you would be entering a sale to open. Now since it is an opening transaction, it would add 10 to the open interest, and if you later want to purchase the options, you would enter a transaction to buy to close. Now open interest would then decrease by 10. So it's a similar scenario. Now things get a little complicated if the options you trade are not created by the transaction. Instead, the other side is taken by someone doing a closing transaction. For example, if you are buying 10 of the ABC May 27.5 calls to open, and you are matched with someone that is selling 10 of the ABC same underlying 27.5 calls to close, then the open interest number will not change. Now you can see more real-time examples by buying and selling, and also seeing the option chain from NSE India. So that's a little bit about um, open interest and the trading volumes. And the bottom line is that trading does not occur in a vacuum. Indicators and reports that show you what other market participants are doing can be valuable addition to your trading system. Now this is this is like a fuel to what you are doing. This doesn't indicate everything 100% clear cut of the direction, but daily trading volume and open interest can be used to find trading ideas which you might be overlooking it. So these indicators are also helpful to making sure the options you trade are liquid, allowing you to easily enter and exit a trade, as well as ensure you get the best possible price. So what we are trying to say here is being liquid will actually tell you whether you can exit the trade at any point of time or not. That means if you if these stocks, or if the trading volumes are not good, then you may not find a buyer or a seller, and that also means that you may not be able to exit a trade when you want, even if loss. So that's something which you have to understand it very clearly. So hope you enjoyed this informative video about options trading volume and open interest. If you have any comments, questions, clarifications, feel free to write on the comments section. And if you want to open an account with Zerodha, which is the first discount broker with India, you can click on the description below, where there is a link to you can click and open an account with Zerodha Trading, to open your trading account with Zerodha. So if you want to see other videos about how the discount brokerages work, please visit my other videos to get more clarity on it. And I will create more videos on it to simplify your trading method, trading style. So hope you enjoyed this video. Thank you, and I will see you again on the next video.